What's going on, everybody? So in today's video, we are going to be talking about wash sales. And so wash sales appear to be one of the biggest concerns for new day traders. I've seen people in position where they literally cannot sleep at night in fear of flagging a wash sale. Now, rightfully so, if you interpret this rule incorrectly, it could have devastating impact on your taxes. If you ever took a look at the Robinhood trader who apparently only made $45,000 day trading, but his tax bill ended up being on $800,000. And it's also, said that he only made $60K in income. So how in the world is he gonna cover that tax bill? As a tax professional, I can honestly say that I have seen this situation more often than not. So as an end user and as a trader, as an investor, it is extremely important that you get yourself educated. So in today's video, we're gonna address this very topic. Let's run it. What's going on, everybody? Brian Rivera here, CPA, and I wanted to welcome you to the channel. On this channel, I typically talk about personal finance, entrepreneurship, and investing. So if you are brand new, don't forget to hit that subscribe button. So the wash sale rule was designed to prevent taxpayers from taking a loss to claim the tax benefit, only to turn around and rebuy that same stock to include it in your portfolio. Now, investors can also get tripped up by this rule if they use an automatic investing strategy, such as dividend reinvestments or dollar cost averaging. They could flag this wash sale without actually even knowing it. Now, as a day trader, you are flagging this thing all day, every day, especially if you are scalping in and out of positions and if you are trading the same stocks over and over. For a list of the top transactions that could potentially flag a wash sale, I want to link a video above that I did a couple months back that identifies every single transaction that could flag a wash sale. So first order of business, what in the world was Uncle Sam thinking when he created this rule? Basically, as I mentioned earlier, this rule is to prevent you from claiming a tax benefit, aka tax loss harvesting. This is preventing you from taking a loss on a position that you want to hold in your portfolio, claiming the tax benefit, and then turn around and rebuying it. That's all it's doing. Uncle Sam doesn't want you to take a loss and then think that you can jump right back into this same exact position. Now, our friends that participate in crypto don't actually have to worry about this because this is not a rule placed on those type of assets. This is only applicable in the stock and options market. So what I'm gonna do now is I'm gonna jump into some of the most frequently asked questions around the wash sale to see if I can clear some of that noise up for you guys. Hands down, the most popular question I get is, what if I wanna take a loss on a stock so I can claim the loss, but I know I wanna still be in this position long-term as a part of my portfolio? What are the tax implications to this? So if you wanna do this, the wash sale rule will kick in. So the minute you take that loss and rebuy, you have now flagged a wash sale. Now the loss is not all gone. It's just gonna get added to the cost basis of when you rebuy that particular stock. In addition, the holding period is going to get added to the holding period of the new replacement security. So to illustrate this point, let's go ahead and take a look at an example. And I think by reviewing an example, this may make a little bit more sense than just me talking. So let's just say there's a Robinhood trader. And so this is what a trade history file will look like if you trade at Robinhood. Now, this is completely sample data. This is sanitized data. This is not real live data. This is just for illustration purposes, but if you wanted to export your trade history file from Robinhood, it would look something like this with hundreds of transactions. So let's just say a trader purchased Tesla on December 6th for $900, $90,000 cost basis. He or she turned around and sold it for $70,000 and took a $20,000 loss. So let's see what this is gonna look like for tax purposes. This is just a regular transaction. And so what I'm using right now is the software Trader Files. And so this will be, by the time it's available for public use, it'll be in a different state. This is just how we kind of use it internally. So I'm gonna select my brokerage firm, and then I'm gonna drop in my current trade history file. So this is gonna be the regular loss example. I'm going to add in the sales proceeds. So I sold it for $70,000. This just is a completeness check just to make sure I have all of my data from my trade history file. When this is going live, how you would do this is you would just plug in the number from your sales proceeds on your 1099B. That will tell you that you have a complete data set. Let's go ahead and generate this report. It's generating. Now it's live. So let's look at our 8949. What this report does is this is going to tell you your capital gains and losses on the year. And this is included on your personal tax return if you're an individual trader. So as you can see, I've got this Tesla transaction, paid 90K, sold it for 70K. So I took a loss of $20,000. This is going to then flow into my 8949, which is also on my Schedule D. Let's go ahead and show you the Schedule D, which is ultimately going to go into my personal income tax return. So this is what the YouTuber's loss is going to look like. Let's just say the YouTuber decided that he wants to be long Tesla. So in this same example, what we're going to do is we're going to layer in an additional buy. So we have the buy for 90K. We got the sell for 70K. Now Tesla dipped to 680. So now you're like, this is a great price. I'm gonna add it to my portfolio and I'm gonna hold long-term. So let's just see what happens from a tax perspective. So we're gonna go back to trader files. We're gonna add our brokerage firm. So we support many brokerage firms, but in this example, like I said, we're using Robinhood. Let's go ahead and add in the open wash sale. So sales proceeds, that was 70,000, I believe. And then we're gonna check this box. And so let's go ahead and generate a report. All right. Now, as you can see in this example, I have a wash sale adjustment for $20,000. So what this means is I have a disallowed loss that will not be recognized until I decide to close this position out. So actually, let me go to the 8949, which will show you a better picture of what that means. So I took that $20,000 loss, but just because I rebought it, my taxable gain and loss on the year is zero. So if I have other gains and losses on other positions, my income is going to be $20,000 higher because I flagged the wash sale rule. So two things to note in this situation. What you want to do is if you have an open position, the first thing you want to do is you want to close that position out to recognize the loss in the current year. And that's just so that way you can recognize the benefit for it. The other thing you want to do is you want to make sure that you don't touch that position for at least 31 days. And the reason for that is that you don't want to generate a wash sale that's going to cause a loss to get carried into the next tax year. So I'm actually going to touch on that particular point here shortly, but for the most part, for this example, the best thing you can do is if you rebought it, close it, sit it out, come back in 31 days if you are in the month of December. Another question I get, what if I want to take that loss, but I also don't want to sit out of the market for 30 days? I'm a trader and this is what I do. Well, you could take the loss and then you could turn around and buy a similar security in the same industry. So if we're using Tesla as an example, maybe you could buy a different EV company, because although they're in the same sector, they're not necessarily the same ticker, so they're not substantially identical. IRS views substantially identical as both the stock and the options. So you could flag a washout between those two. Now, if you jump on the Google, you will notice that a lot of different websites will tell you that you need to sit out of a stock for 31 days, and that is only partially true. So the most critical time period that you need to be aware of what's going on is going to be the month of December. That's if you have open wash sales attached to December positions, or in the month of January where you have generated a wash sale in January from a loss that you took in December, because you remember the 31-day or the 30-day period could make its way into January. So you want to be very careful so that way it does not bite you in the butt. Now, every other month you could generate it and you're fine. But again, December and January is going to be the crucial period that you want to make sure that you've got a handle on your wash sales. You can use a software solution like Trader Files, which is going to help you make real-time wash sale decisions. And it's also going to help you generate your tax reports. Because I can't tell you how many times traders or CPAs don't know how to handle this type of volume. And so this software solution was created specifically for this. So the advice that I give everybody is keep trading if you think you're going to make a profit, especially in December. But if you feel like you're going to keep taking massive losses, then sit out of those positions and get an idea of what your wash sales are. Another question I get, so if I purchase stock in one account, took the loss, but I decided that I'm going to trade it in another account, what are the tax implications of that? And does that consider a wash sale? So the answer is yes. Wash sales must be tracked across all of your accounts to include your spouse. So if you've got a Robinhood account, you got a TD Ameritrade account, you got an E-Trade account, you trade the same ticker across all of those, then it's your responsibility as a taxpayer to track wash sales across all brokerage firms. Now, the broker requirement is not the same. Robinhood doesn't know what you're doing at E-Trade, and E-Trade doesn't know what you're doing at TD Ameritrade. So when you're generating your tax reports, you must make sure that you are looking across all brokerage accounts. including your spouse. Next question. What would happen if I took a loss in my taxable account, but I decided that I'm gonna purchase that same position in my retirement account? Now, what happens there? If I did this in my IRA or my 401k or my solo 401k, what are the tax implications of that? So the IRS has ruled that when a taxpayer takes a loss in a taxable account and decides to trade that same name inside of a non-taxable account, that is still considered a wash sale. However, this is considered a permanent wash sale. So when you have a permanent wash sale, that loss is permanently disallowed and you don't get to add that to the cost basis of your replacement share. So that wash sale is completely lost. Next up, after Santa leaves my house, can I take a loss on December 26th or let's say December 31st and then turn around and buy it on January 4th so I can squeeze that loss in and then turn around and rebuy it? Can I do that? Now remember, the wash sale rule is not confined to a calendar year. It goes across both years. And so that's why I mentioned earlier, the most crucial time you need to pay attention is December and January, because you don't want to create phantom income. So the wash sale rule is not subject to year, but it's month to month and it's looked at in 30-day increments. All right, guys, so hopefully today's video was useful and helpful, that helped you provide some context around this very topic. I have been getting a lot of comments and questions around this very subject. So I thought it'd be much easier if I just answered the top 4 or 5 questions that I'm seeing to help the YouTube community out there. Now, if you are a trader under the wash sale rule and you're looking for a comprehensive tax solution, I highly recommend using something like Trader Files. Full disclosure, it is a company that I do own, and so I stand by the product, and I've spent a lot of hours and a lot of money getting this to a point where not only my CPA firm use it, but every single end user out there could also use this to help make better informed tax decisions. It'll help you make smart decisions. It'll help you generate your investor or trader specific tax reports. And if you decide to do your taxes on your own, we also built in a TurboTax integration. So we will integrate directly with TurboTax. And the last thing I'm gonna say is if you're an active trader, you should very much look into electing what's called Section 475 mark-to-market accounting. I got a ton of videos on that very topic, but if you do that, you no longer have to worry about wash sale reporting. You are now under what's called Form 4797, which is mark-to-market accounting. All of your positions get mark-to-market as of the last trading day in the year. And guess what? Trader Files will calculate that for you as well. So I sincerely wish you guys the best of luck on your day trading, your investing journey. We'll catch you at the next one. Have a good one.